Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, we did see some explosive moves last week on the commodity markets. Number one being palladium, which broke out over 14% last week. That actually banked us 3,450 points profit. So of course, for every one lot that you would be trading, that's $34,500 of profit. For every 10 lots that you would be trading, that's $345,000 of profit. Now, last week, the Federal Reserve, they pledged to keep interest rates pinned near zero throughout 2023, despite concerns about rapidly increasing inflation, which has now taken over from COVID as the biggest risk to the global financial markets. The Federal Reserve's comments, they lifted precious metals higher, driving gold up to 2-week highs. In fact, this is where we banked 1,290 points profit on gold on the FOMC statement. And also we banked 2 positions on silver as well, as silver traded north of $26.50 per ounce, whilst palladium prices, they surged over 14% last week. Now, the Federal Reserve will take front and center stage as we go into a new week, with Fed Chair Jerome Powell testifying before Congress on Tuesday and Wednesday. Powell is testifying alongside Treasury Secretary Janet Yellen before the House and Senate on the pandemic relief and the economy. Now, the inflation debate is likely to continue. So far, the Fed, they've ignored rising yields and played down the rapid rise in inflation, stating that any price acceleration will be temporary, but policymakers will have to address this problematic issue eventually before it snowballs into something they can no longer control, which is why all eyes will be on the Federal Reserve as we go into next week. If they acknowledge inflation or even just admit that rising yields are a concern, that will add further upward momentum to the precious metals as we go into a new week. On the flip side, however, if the Fed, if they choose to blindside growing inflationary pressures and rising bond yields, that could trigger downward pressure across the financial markets. Also on the radar as we go into next week is the US Q4 GDP data and the Fed's preferred inflation measure, which is PCE data. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. So first of all, let's actually move over to palladium here. So palladium spiked 14% last week. This is a market we've been discussing with you for a long time at the Gold and Silver Club on the week ahead commodity reports, where we've been building into positions over the last year here. We took the opportunity last week on the breakouts there to lock in 3,450 points profit. Palladium has broken out to 1-year highs. This has been an immense move just within the matter of 1 week here. So I hope some of you have also capitalized on that alongside our members at the Gold and Silver Club on this breakout that we've now seen to the upside, breaking out to 1-year highs on palladium. Now, not only did palladium have a big move last week, gold prices as well also spiked to 2-week highs on the FOMC statement. So we took that opportunity to bank over 3 positions, 1,290 points of profit. As we mentioned to you in both gold and silver asset of the day, often you want to just keep coming in and out of the markets right now. Be nimble, lock in profits regularly. We saw this after the European Central Bank announcement and also after the FOMC statement. Both of those news items, we saw a spike on the day of those news items. The following day, the market gave back those gains and in fact sold off below the previous day's lows. And that gave us a great opportunity to bank on the news and then actually reload again on the sell-off that we saw the following day. So you want to just keep coming in and out of those markets. Just treat them as a trader's market right now. It really is very favorable just to keep coming in and out of the metals regularly. They're moving typically within 500-point ranges to 700-point ranges week to week, and you want to capitalize on that volatility in the market. We built another position again on the sell-offs that we saw on Thursday here. That trade quickly moved into profit, and on Friday we got the typical push higher into the close as well, as hedge funds and money managers, they've increased their overall net long positions on gold in the latest week. Then look over to the weekly chart with gold here. You've had 2 consecutive weeks of gains here. We've found support at that area of liquidity before we saw the rally over last summer, which brought gold prices to all-time highs, and we're back right within that spot at the moment, where we've had a couple of weeks of consecutive gains. And going into next week, I would again expect the usual volatility here for gold, but ultimately what I would look out for would be the potential again going into next week for a higher high and a higher low here on the time frame such as the weekly here. My expectation would be that we will get a push higher into the previous levels of support that were broken down from. So this was going back to the levels that were taken out from the November 30th lows and the 15th of February lows as well. My expectation would be that we could start to get a rise and build up momentum to test those levels as we go into a new week. But again, make sure that you're taking profit off the table regularly, because as soon as we come up to those levels, often you see big profit taking occur. This often offers opportunity for you to take profits off the table at the highs and then buy back in on the subsequent selling pressure that we often get. So that's what I would look at going into next week. We've established 3 positions on gold here. I would look for more upward momentum going into a new week. But again, once you start seeing us come back to previous area of support, turn resistance here, I would look out for taking some profit off the table and just reloading on the regular volatility that we do see in the precious metals right now. It's the same with silver. As I mentioned last week, I like silver sub 26 US dollars per ounce, particularly closer towards the 25 level if you can get it. It may not dip down as low as that. Currently we have 5 positions on silver. We banked 2 positions on the FOMC statement on the spike that we had to the upside here. Any selling pressure that we get next week back towards the 25.50 to 25 handle, that is where I would look at that as an opportunity to add further positions on silver. My expectation would be that throughout this month, then into April, we will slowly but surely come back, retest the weekly highs from last week and come back towards a neckline and the levels that were tested back in February here as well. But we'll probably just continue to base for a bit more over the next few days here. I would really look at any selling pressure here as an opportunity to add further positions, and once we can take out last week's highs, then I would expect the move to start building up momentum back towards those levels that were tested back in the middle of February here. That would be my overall expectation here for silver. And then moving over to platinum. So platinum is a market where we've got 2 positions on this right now. We took the opportunity after the big sell-off that we got at the end of February and then into the first week of March after non-farm payroll. We started building positions in this market. Overall, hedge funds and money managers, their overall positional bias is very much on the long side of this market. Out of all the hedge funds and money managers that have a position currently on platinum, 80% of them are long. So we do continue to see each dip getting bought into. We're still keeping our 2 long positions on this market, which in combination are up over 1,500 points. We've also taking the opportunity with the recent selling pressure we've had in some of the industrial metals to top up further positions. One of those has been copper, which moved immediately into profit here on Friday. So I'll definitely keep an eye on that going into next week. Overall, the day-to-day volatility that we're getting in the markets, it really is just a trader's paradise right now. You want to keep taking advantage of the range-bound price action because you can see most days we're getting an up day, then a down day, up day, then a down day. So if you're constantly banking profits, buying back in, and if you're aware of the daily, the weekly, the monthly cycles in the market, it will help you massively compounding your returns and keep topping up and bricklaying your trading account where you're banking regular profits, increasing your portfolio. That's what you want to be doing in this market. I'll also put on your radar as we go into next week the energies here, such as natural gas, which broke down to 8-week lows. We've actually established 2 positions on this market, which are currently up over 100 points into Friday's close. It's very important when you're trading commodities that you're aware of the specific events that will cause those breakout moves in these markets. Alongside that, you want to have awareness of capital flows. So this also includes the daily, the weekly, the monthly, quarterly cycles for the commodities that we are trading. Alongside that, be aware of what the hedge funds, money managers, the banks and institutions are doing, and understand the professional approach to the market so that you're not trading the same way as every technical trader that's utilizing their outdated technical strategies, gimmicky indicators which do not work. They keep getting chopped up and it's not giving them any sort of edge at all. You'll want to make sure that you're utilizing research, data, market intelligence. Understand sentiment in the market is very powerful for you, and also marry that up with intermarket correlations, ratios in the market, understanding of capital flows, how professional traders are approaching the market, which is completely different to technical traders who keep getting faded in the market. They're getting trapped trapped. Buying at the high, they get trapped. Selling at the lows. We see this time and time again for 100% technical traders in these markets. You want to be trading the same way that the hedge funds, the banks, the money managers, and professionals are utilizing data, research, and market intelligence. So with that, if you would like to learn the research-driven approach to the market, join our community of successful traders and join our professional mentorship program. There is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.